Now let's talk about taxes. How much are you going to pay in taxes? So not a CPA, but I do have my own dividend investment with the tax strategy in place. It doesn't matter if you're withdrawing or reinvesting your dividends every year. You will owe the taxes on the dividend distributions. But here's the big difference. You get qualified dividends and non-qualified dividends. And qualified dividends, they're taxed at 0%, 15%, or 20% in long-term capital gains tax. And non-qualified dividends are taxed at your ordinary income tax. So if your marginal tax rate, income tax rate is at 24%, then you could pay 24% of your non-qualified dividends. And I'm going to explain what those are. So how do you know if you're getting qualified or non-qualified dividends? A qualified dividend needs to be paid by a U.S. corporation or by a qualified foreign corporation. So if you invest in a foreign stock on the New York Stock Exchange, then the dividends could be categorized as qualified dividends, but make sure you confirm that before you invest. It also needs to be regular dividends and not capital gains distributions. You also have to hold a stock for more than 60 days during a 121-day period, beginning 60 days before the ex-dividend date. The one thing to keep in mind is the real estate investment trusts or REITs, master limited partnerships or MLPs, because they're not structured as corporations for tax purposes. So if I'm investing in REITs or MLPs, any dividends I receive from them are considered non-qualified dividends and taxed as ordinary income tax. So with that in mind, let's say I have $1 million invested in my dividend stock portfolio, and that is yielding 4% annually. Okay. So that means I will make $40K a year, right? Or $10K every quarter. That'd be awesome, right? If you had $40,000 a year in dividend income. So $40,000 a year while I'm actively employed and making other income would probably put me in the 15% capital gains tax bracket, which is still not as bad as 24%, 32%, or 35%. So that would be roughly $6K in taxes every year out of the $40K. So that leaves me with $34K every year, right? So the net dividend reinvestment would be 3.4% after taxes and maybe management or brokerage fees. But let's just say that I retire early and I have no active income. I could get these dividends tax-free. And let's look at the, here, let me show you why. What people forget, and we're so focused on the 15% capital gains tax rate because most people have active income. But when I'm in my early retirement, my wife and I will continue to file our taxes jointly, right? Married, filing jointly. And so we can receive our qualified dividends income up to $89,000. Well, I'm sorry, that's the wrong one. There we go. $89,250 up to $553,000 in that's taxed at 15%. But this one is all taxed at 0%. How incredible is that, right? Which is still lower, at 15% is still lower than the ordinary income tax. And if you're single, it's half of that. So up to $44,625. So would it be better if you're married? Yeah, for tax purposes, it would be better, right? Not saying that everyone should get married. I get that. So keep in mind that these dollars are adjusted by inflation every year. So last year it was like $84,000 or something like that, but they adjusted by inflation. So this $89,250, where do you think that's going to be in 8 or 9 years, right? In 10 years, in 15 years? It's going to be a lot higher, right? Because of inflation. So these dollars will probably go up to $100,000 or $110,000 for the 0% capital gains tax rate. That's what I'm saving for. And I know that I'm not going to have an active income, so I'm going to bank on that 0% capital gains tax rate. Am I going to have no other income? No, right? Now I'm still going to have other active income. So after all the deductions and, I have my own CPA, I'm still going to save a lot of money on the dividend taxes because they're taxed as long-term capital gains. Let's do some reverse math and using today's tax bracket. Let's just say $89,000 in qualified dividends. Okay. So 89K a year is how much I want to live on. Okay. With a 4% annual dividend yield. So I divide that by 4%. Hey, Alexa, what is 89,000 divided by 4%?
89,000 divided by 4% is 2.225 million. By the way, you can thank the driver of your most recent delivery, and we'll share your appreciation with them.
Yeah, okay. Thanks, Alexa. That's why I have Alexa. That was too big of a numbers for me to figure out. But divided by 4%, that would be $2.22 million, right? And if I had $3 million invested, yielding 4% annually, that's 120K a year, right? This is before the standard tax deduction. So I could potentially make 120K a year in tax-free dividend income in the year 2033 or 2035. And if you're if you're brand new to my channel, and I've been talking about this for the last 2 years, is that my retirement age is going to be 45. After that, I'm done. It doesn't mean that I'm going to quit all of this. I'm going to continue doing what I love to do. Imagine having 120K a year, right? Yielding 4%, 3 mil, or probably less than that. Let's say 2 mil, making 89K a year, tax-free. How awesome would that be?